Joining us from Singapore now is Leif Eskesen. He's HSBC's chief economist for India and Southeast Asia. Welcome to the programme. And of course, one of the key targets today seems to be a credible fiscal policy to bring down the deficit and to also, well, of course, help tame inflation and bring in some of those investors, those foreign investors. What policies, therefore, do you want to see, Leif, to convince you that they are tough on the fiscal policies?
Well, first of all, it's going to be, tricky in a sense. I mean, the government has to walk a tightrope between, on the one hand, regaining fiscal credibility. We expect a significant slippage this fiscal year, and also help out RBI in terms of taming inflation. And then on the other hand, they can't be too draconian, so they can't be too tight because growth is still low, and they also have to cater to populist demands. So what we're looking for realistically is a deficit of around 5% for the central government. The key thing is that the budget is, number one, built on credible assumptions about growth, what they can potentially achieve in terms of divestment receipts, privatization receipts, and also that the government starts to tackle some of the structural issues in the economy, including issues related to too much spending on unproductive items such as subsidies. So they need to address the subsidy bill and start to rein in also more revenues in terms of raising taxes. So those would be the things we look at for credibility and some progress on structural reform measures.
Do you actually think that's achievable today? Do you think that they will convince the market that they can swallow some of these bitter pills and stop the significant slippage in what you see as the deficit?
They're going to try, but as I think in terms of the target they're going to go for, it's about 5%, I think, of GDP, the deficit. So relatively moderate consolidation of public finances. That's how they're going to do it. That's probably what's realistic this time around. There's even a risk, I would say, that some of the assumptions they build into the budget in terms of growth, in terms of what they can achieve in terms of privatization, and to some extent also what they can achieve in terms of subsidy reductions, that they might be a little bit too optimistic. So at the end of the day, when we fast forward 1 year, we're probably going to be above where they ultimately target in terms of deficit. So a little bit more slippage, but probably not as much as the current fiscal year.
I see. So not at that 6.1% that we've seen for this year, but hopefully bringing it down towards the 5% target you expect. How else can India harness growth and actually attract investors? Because really, we are seeing quite a divergence between India and the other BRIC companies. What sort of policies do you want to see to open India to overseas companies? Will that work? Because actually, recently we've seen a bit of backtracking over the issue. The likes of Walmart, Starbucks, big multinational companies. Are they willing to take the risk to come into India?
I think you're absolutely right. I mean, the key thing for India is not necessarily to ease monetary policies or support growth. What's really important is that they reignite the structural reform agenda. So one of the aspects that you mentioned, for example, is to start to open up for more competition in multi-brand retail, for example. So opening up for the likes of the big retail companies coming in and not backtracking on that. So start to roll these sorts of reforms out. They have to really start cracking on bringing, should we say, infrastructure back up to better standards, more roads, more reliable power infrastructure. They need to make it easier to do business in India, not so much red tape as you currently have. So on a broad, I would say, number of fronts that really need to start moving. It's going to be difficult, though, because the government is, of course, facing a relatively difficult political environment in which to work. And they will probably lean somewhat more towards, should we say, more populist policies over the next couple of years. So the traction on these structural reforms is probably not going to be impressive. But I do expect that there will be some pickup in terms of the structural reform implementation over the next couple of years.